Africa, a land rich in natural resources, culture, and potential, yet burdened by a heavy legacy, the chains of debt. And behind those chains, two powerful names echo across the continent: the International Monetary Fund and the World Bank. Let's rewind. After independence in the 1950s and 60s, African nations needed to rebuild. Lacking capital and infrastructure, many turned to external lenders, including the IMF and the World Bank. In the 1970s, two oil shocks rattled the global economy. African countries borrowed heavily to survive and to invest. But by the 1980s, debts piled up. Enter the IMF and World Bank, promising rescue through structural adjustment programs, SAPs. SAPs were the cure, but they came with a cost. To receive loans, countries had to agree to major reforms. The rules: cut government spending, open markets, privatize public services, float the currency, remove subsidies. In theory, stability; in practice, controversy. Now let's be fair. The IMF and World Bank have made efforts to support African development. They've trained local economists, supported tax reforms, invested in roads, health, and education, and wiped out billions in debt through programs like HIPC and MDRI. Countries like Tanzania and Mozambique saw significant gains: school enrollment, GDP growth, and better public services. But there's a darker side. Critics argue these institutions haven't just helped, they've controlled. SAPs slashed healthcare budgets. Farmers were exposed to cheap foreign goods, with no support. Privatization handed national assets to foreign companies. Decisions once made in African capitals were now shaped in Washington. Debt didn't just go away, it evolved. Even after relief, many African countries found themselves back at the IMF's door. Why? Because their economies were still fragile, exports were limited, global shocks hit hard. This cycle of borrowing, reform, repayment, and borrowing again has led some to call it a debt trap. Let's take a closer look. Ghana, praised for early reforms, but returned to the IMF in 2015, and again in 2022. Why? Rising debt, inflation, and a struggling currency. Zambia gained debt relief but defaulted in 2020. Why? Heavy borrowing for infrastructure, but low returns. Ethiopia used loans for large-scale growth projects, but IMF conditions still shaped key decisions. Africans aren't just passive actors in this story. They've spoken out. Civil society groups, economists, and former finance ministers have all criticized the lack of African ownership. Groups like Afrodad have called for change. They want fairer terms, more representation, and most of all, economic sovereignty. So what's the future? Total rejection of IMF and World Bank, or deep reform? Many call for an African-led financial future, with regional banks, local credit rating agencies, and new partnerships based on mutual respect. The IMF and World Bank have helped, yes, but they've also controlled. Africa's challenge isn't just about reducing debt, it's about reclaiming power. Africa doesn't need saviors, it needs partners. Partners who listen, respect, and empower. The story of African debt is not over, but its next chapter must be written by Africans themselves. If you found this video insightful, please like, subscribe, and share, and comment below. Do you think the IMF and World Bank are helping Africa or holding it back?